I am not a financial advisor. These videos are all meant for educational purposes only. All Complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTA's Daily Review. Today's Friday, August 25th, 2023. Hope you had a good week here. So we had an expected bullish day. It's Friday, so you always got to make sure you count that in. And a retracement of the week candle. Let's go through it here. I guess I could just show you from here. Well, we have that drop from yesterday, right? We end up retracing back. That buy at the end of the day yesterday bought up almost to 50% of the range, but it did not. And then news opened up at 10 o'clock, played around, took liquidity on the top side, then shot down for the liquidity below. This is kind of like our double bottom, and then bullish rest of the day, coming back up into a deeper retracement to the 61 of this range from here to here. All right, so let's take a look here. So price opens up here. This is a 5-minute, yep. And then this was the end of the day. We made the video here, said it was pretty much going to buy up. Now this fib wasn't here yet, so wasn't this level, so it was here. This level here when we ended the video. So I'm going to drag it out like that. All right, so price is shooting up here, and then 9:30 opens, pops up here, doesn't hit the 50, and then price retraces back down, takes out that liquidity. Then 10:05 news starts. All right, and then brings the price down one more time first. Still in a buying area, and we still have not hit this 50. So price comes up, take that buy all the way up here, doesn't come up here. Our target is to try to get this liquidity sitting right here. See that? Fails here, and then everything sells off. So if you have other screens with you, you'll be able to see the strength of all the indices sinking and dollar about to change direction going up. So in 1 minute, this is obviously much more clear, which I'll show you in a second. It's hard to not show you with this range, but trying to have the logic of this fib here. So price shoots up again. Okay, so here, so this is 10:05 here, right? And the price is shooting down. You want, on a day like this, you want, let them do something. Let them take liquidity. Let them show the hand. You can chase this stuff if you know what you're doing, but it's not likely. Like I still took this buy at 9:30 right here. Pre 9:30, shot up, took the money, and then got stopped out for a buy here. But this one hung, and price came down, took out that liquidity, took the buy, took the trade out of that liquidity, and then everything started selling. So with the fib here, yeah, I want to extend it, but so you can see this. Let me just extend it this far. So this being the case of when the price reaches up to almost the 50, remember in previous videos, you'll hear me say sometimes it won't reach it. It'll set it up for liquidity later, and then you'll have to extend the fib one more time, right? Because you're expecting this fib to retrace to a 50. Would, in a perfect world, be nice to just sell from right here, obviously, right? But I know their game, and if you're watching all the other different assets, you'll understand. We took liquidity here, boom, this is a sell. So doesn't reach to 50, no problem. I'm waiting for that price in a 10-second chart. You can see, I'm gonna show you, might as well. So keep in mind, I have 10 seconds, 1 minute, 5-minute charts as well for a lower time frame, all at the same time. So, but this isn't necessary. You could have done this also on a 5-minute. But me, I like this kind of pattern. If I'm looking for a retrace back down, and no matter where it goes, just as far as it retraces, you got two candles that close inside this up candle, and then you have this down candle that if you're assuming that it's going to bust through, you'll see an imbalance here, and it won't give you any retrace. But this candle right here comes underneath this open, pops in right here, and it's inside this candle. Boom, it's an automatic sell. So this is a pattern I look for. Like I won't take Like you could have maybe took this sell here, but this doesn't look like what I'm looking for here with some type of strength and that, right? So pops up a little bit more. This one doesn't look well as well, which could have, but one more shot here and that would have been your target, especially being closer to underneath the 50 fib, right? So this sell here, this comes down to where, if you're looking over here on the 15-minute, you're in a wick. We're above here, we're in that block. So you're expecting some manipulation up, right? As far as the sell goes, you're looking to come down for lower prices. You at least taking out this low. Why? When we were up here, we took out that liquidity. And we've already came up into here, right? So as far as the sell goes, dumping off and other assets were doing as well. They were looking for liquidity. This is a liquidity shakeout day to begin with. So it's constantly looking and searching for liquidity and building it. But price comes down, takes out that liquidity here, and I'm taking the trade out to right here. So from here, this trade gets closed out above liquidity, which is one of my rules. Take the liquidity. You could see here on the 10-second. I'm gonna squinch it up anyway. I don't necessarily need just so you know the colors of the candles. This is good to see through structure, but I'm trying to squeeze it in so you can see this. Generally, this is a lot bigger for me. But all right, so price take the profit here. Don't look for a buy yet. I'm assuming that they're gonna take out the liquidity. Sure enough, they come down. When it reaches here, it takes liquidity out right here. So now you're waiting for a 3-drive situation down. You're not trying to be thirsty and hit it immediately. And sometimes that works, but here we get 1, 2, 3. I take this anyway. And sure enough, it fails. And then I get my beautiful pattern again right here. Price breaks down, takes out that liquidity. Look at these candles here. You get to push up with this bullish candle right here, retracing right back into those blocks. Look at those two levels are the same. The open of this candle and the high of this candle. Same level, taps in. If it's going underneath that block, I don't want to be in the trade. It's just not ready yet. You might have to wait a couple more drives or wait to see if it does something like more volatile, right? Anyways, that's immediate buying in. Here, your idea is if you want to be on the safe side, you want to shift some type of structure here. If this was a lower high, which is very evident that it dragged this price down, then if you break this high, you're looking for a retrace here. You get the retrace. This is your next entry if you didn't take them. If you're wondering what I have thought about taking other entries on the way up, if this was too difficult for someone to see or realize, well, no tap in here on the imbalance. You could have actually tapped in again when it came, but it's the same level, so I won't even go into that. But here you get a little imbalance right there on the 10-second. See how it dips right in? You could push your entry right there. As soon as it taps in, stop loss right here. If it goes any lower, then it's not a good looking trade for you anyway. And then anyways, retrace back up right to the opening gap, which is beautiful. So you can't miss that. And you could wait for confirmation here. So you get this down candle, price moves up, price retraces right back into the daily gap and into that block. Your stop loss is right there. Beautiful. If it goes any lower, then that's not the trade, right? So, and where are you taking this? So remember, this is Friday. So you're expecting some type of bullish day. And obviously we would have liked it to just keep going from here, but they had plans on taking out that low of yesterday's low, right? And then with the fib here, I'm not sure if I mentioned that. So when the price comes down here, I got the fib and I extend it, right? So now the fib is here, right? And you're taking any buys from here, where are you taking it? Well, look what happens when I need to go to a better time frame now. This is crazy. So right when you make this low right here, right? And on the 1 minute, that's why I'm not using 1 minute for entries. I can't even really see what I need to see, even though this did open up and come right back into this opening, that's you can push the button again right there. That's how it looks like on a 1 minute. But where are you taking this to? Well, when I made this range, so I'm identifying ranges, right? From here, not here now, to here. Look where the look where the 50% level is located now. Now the 50% is right there, right above literally the same high that we sold from when it spiked up. So that's a beautiful target and possible 61. And what's above here is, if you look to the left of me here, you'll see there's an imbalance of price all right here that it sank and broke. We broke this level right here. Remember, if you watch yesterday's video, that'll make sense. That's when I dropped the ball and didn't catch all this trade here, right? So anyways, right above there, look where we tap in, boom, 61, and we have a gap right there. You can see that, right? You see this gap right here? Highlighted? Sitting right by itself, literally. So you have a lot of confluence of a target here. It was too rich for my blood to wait. I was holding it. Once this 15-minute candle closed, let me move it a little bit. Once this 15-minute candle closed, and then we got this candle, it was really suspect on the 10-second, and I left it alone. And I don't need any more. Fuck that. And holding this through lunch, and when it was here, someone will ask me, wow, how did you hold it through all this? Well, number one, I'm very confident in this price right here to get wiped out. 100%. Number two, you got to be strong. You just got to hold the trade. You just got to hold it and trust the higher time frame idea, not a smaller time frame. I'm not like scalping from here to here, right? Or something like that. Could be to here, and to be honest, I was almost gonna be done here and here and here, because it pops up. It didn't even give me a good range. Retraced. I'm gonna hold it. It's gonna be held in this price right here. Price comes up, comes back again. I'm like, shit, you should have just took the money. No big deal. But this is Friday. This is the only reason why I held this long. I was really hoping that they would have shot this bitch really high. But we didn't get that. They were pretty stagnant here. So, and this was actually a nice sell also, by the way. From here to here, that would have been nice if it came down here to wipe out the liquidity from people buying. Because when you're here, you're like, who are you going to fuck next? You're going to take out the liquidity from where? From the buyers, right? Because when we were selling here, they're coming out to take out liquidity here and get above and to make fair delivery. Like they want to do it incognito. And just remember this video, because when I extended the fib and you see it fall short of 50, well, that's sometimes a sign that it's going to come down and just take out the next low first, so you can then buy back up for engineering liquidity on their own as well, right? So that's why I'll take something like this when it wasn't at the 50, because I know how they operate. So anyways, once you extend the fib, your direction, your point is to hold this trade with dear life. And sure enough, profited really nice. I didn't get out right here. I actually let it get up a little bit higher, and then I was done somewhere around, I think it was here. And then short of the 61, I have no problem with that. I'm actually playing a video game while this was happening, but not like serious or anything. But so anyways, yeah, that was the day here. Pretty smooth, pretty logical. And as far as them rushing down to here, they left it alone. But they did. I mentioned this yesterday, that this low right here was key. I mean, I mentioned this too here, but that would have been if it really stretched, and it didn't come down. So, we just took out liquidity. You could see the double bottom there. It's late in the month. I expected this to happen around here and then go up. I'm not saying that we are going to come up. The historical data says we'll come up here, but I don't know how they're going to accomplish that in the amount of days that we have left. Even though we do have 4 trading days, can we get up here in 4 trading days? I mean, it'd have to be constantly bullish next week. You'd have to see Sunday opening price going up. I mean, it'd have to take a lot to kind of do that, to get here and then to retrace a little bit back down. So I don't know. It's maybe delayed. I don't see it happening, but And also with the help of dollar here, you had a gap open, which was good. And then you had a peak here. Price retraces back down all the way. When you get this bottom here, this is where we were here also. So this 11 o'clock, 10 to 11. I'm sorry, not 10 to 11. 10:50 to 11. Over here, this is a 5-minute chart, so it was acting weird. Is right here. This area right here, when dollar starts to reach a peak here, this was our buy early in the day at 11. That's our buy right here. All right, so this peak up here between the time of 9:30 and 10:18, you see that? Which was here. 9:30 brought the price down, and 10:18. This says 10:15. This is a 15-minute chart. But see this bottom right here playing around like this. By the time the price is going up like this, you should be in the sell for futures. And that's the double top right there. You get what I'm saying? So that's how it's correlating. That's how I'm making these decisions. And if you have these in front of your eyes, you'll be able to make way better decisions and directions. So, and you just got to pull the triggers, man. You can't be playing. But and holding, as far as holding goes, you just got to hold it. You got to really believe it. Now, in a normal world, I would just take the money here and be done. Right, but my ego, my education and experience is telling me you better hold this all the way. I would have liked to held it till 4 o'clock, to be honest. But once it reached here, I was like, man, dude, screw this, over with, because this did suck, to be honest with you. But you can see that they're constantly holding lows, right? See that? These lows, that's just internal. This was a very obvious buy as well. If you could see the structure panning out. If it was selling from here, you would have never. I mean, pops up again, retraces. All right, pops up again, very close. Look how close they're getting. Retraces, doesn't go below here, and just keeps coming up here. And by the time you're here, you are very confident in holding this because they're just trying to get people to sell in from here. They're just trying to get people to sell. They come up, take it. Come up, squeeze you out. Come up, take it. Boom. This was their whole mindset was to get into this imbalance that's pretty wide open right there. That drop. These are for all the people who are breakout traders. I don't know how somebody can be a breakout trader. But I could never be a breakout trader. It doesn't flow with me, right? But I just use that areas for later confluence. Could you have sold this if it was breaking through like that? Sure. I mean, this has a lot of volume. This is news here popping down. But anyways, so yeah, as far as next week goes, that should be interesting. We got liquidity here. We got liquidity here. If this holds, then we probably get a retrace back down. Because now we've reached a 61, right? So what should I be expecting if we're going to follow bearish trending is that we should come down here and break this low, right? If you're going to follow the structure, right? Sometimes you can't use structure, per se in your analysis. You can, but sometimes you have to just look at liquidity. Sometimes you just have to look at inefficiency and price and see what is the way they're going to get there, right? With the options that you have, narrowing them down. So, anyways, this being said, we could so next week we could pop up one more time in here and come down. Or if they decide to try to break this range here, then I would expect it could still pop up and then retrace back, or it'll just retrace back and then buy again. But maybe somehow up here. If that flow doesn't happen and that idea doesn't try to come up here, then you would expect probably another pop up from here and then just coming down flow and all that. So that's all I got. That's all I could tell you. Down here on the daily time frame, obviously we're in a very weird, the historical data is working in a more normal environment. Obviously, we're not in a normal environment. So, things will be off or maybe delayed or whatever the case is. But as of now, we got liquidity sitting underneath here. And then we do have some imbalance of price right there, some liquidity. So probably popping up is an idea too. It could do either one. So, but if I was to follow historical data, there's our double bottom. And then let's rush for the liquidity that people are getting in here, right? So, but in general, if you ask my opinion, I mean, we should be coming down, right? So, you know what I'm saying? Like, that's just what it is. So I hope this helps. You guys take care. Have a good weekend. God bless.